Just go across to then the management of JK Lakshmi Cement. We have with us Dr. Shailendra Choksi, the whole-time director of the company, now joining us on the show. Remember, the company delivered their Q4 numbers rather, with revenue growth as well as profit growth coming in very strong. Thanks so much, sir, for joining us on ET Now. What were the highlights of the fourth quarter and FY18 as well, and how have realizations panned out in Q4?
You see, in this quarter, we did not gain much in our volume. In fact, we lost a little. But then our realizations have been better by almost 15%. Thus, despite the costs going up, we saw a substantial jump in our cost of fuel. We could increase our operating margin by about 30%.
Thanks so much for joining in. Now, what was the volume growth in Q4 and how has demand panned out?
No, we worked on our efficiency in terms of reducing our freight cost, and in fact, one of the reason of volume being negative in this quarter as far as we are concerned, despite 18% or on pan-India growth of cement and about 4 to 5% in the area where we operate in north, our own volumes did not see that sort of a jump, because we actually curtailed volumes in many segments, especially the non-trade segment, which had become very unprofitable. And that is how we could in fact improve our realization.
What's the kind of input cost pressures being witnessed? How do you see margin trends going forward?
Well, internal mechanism, we have been able to, optimize our efficiencies to the peak level, both in terms of power consumption and fuel consumption, which are one of the best in the industry. But nevertheless, the power cost, the fuel cost, which affects both our fuel as well as the power, because we are dependent on our captive power generation, the impact has been almost 24 to 30% on the quarter basis. And if I were to see on the annual basis, this growth again there is about 14% on a year basis. So we saw a substantial jump, but I do hope that now in the coming quarter we would have now stabilized. So barring minor increase in our fuel price in the coming quarter, I don't think we should see much more increase there.
How do you see your capacity utilization rates panning out in FY19?
Yeah, we definitely expect a much better utilization in the coming year. As if the last quarter is any indication, I think there is a finally light at the end of the tunnel as far as cement industry is concerned. And I will not be surprised if for the whole year the industry witnesses a growth of 7 to 8%, which has been languishing now for last 3-4 years at either zero growth or maybe a growth of 4 to 5% at the max. Now this year I am expecting that this must grow to about 7 to 8%, and our own capacity utilization therefore going up from about 65 to about 80%. That's what our own expectation is.
Okay, leave us with the guidance for top line and profitability in FY19.
See, it's very difficult to hazard a guess at this stage for the FY19, but our own budget estimates are that we should grow 8 to 10%. Our new grinding capacity is coming in Odisha, which should get materialized next year. Next year, our costs are also expected to come down because our captive thermal power plant at Durg would get commissioned by the fourth quarter. So I think as far as we are concerned, our eastern operations should look brighter than what they have been so far. This year also we improved our Durg operations, and in the coming year with these two factors, I think there should be a considerable improvement as far as Durg is concerned. In the north and west where we are operating, I think a lot of our grinding capacities currently are underutilized, especially in Gujarat, where the demand has not seen a huge jump what it has seen in the other markets. But I'm personally quite confident that even in Gujarat, things should now look up better. And of course, one can't ignore the fact that the year 2019 will also be the year of elections, and therefore a lot of economic activities can be expected to, the whole economic scenario should be buzzing with activity.
Okay, you sound fairly optimistic. Many thanks for taking the time out and joining in with a perspective on your earnings, the pricing environment as well as demand. JK Lakshmi Cement though is at the low point of the trading day as we speak at 381.